Hello and welcome to this Commerzbank webcast. I've been saying for months that the ECB has unrealistically high expectations regarding the impact of its bond purchases and that its economic forecasts are too optimistic. However, even I was surprised when the central bank cut its forecast for economic growth and inflation significantly at yesterday's press conference. And ECB President Mario Draghi even said that these new forecasts may be too optimistic. He specifically stressed the weakness of the emerging markets. The bad news from the emerging markets is likely to continue. The forthcoming Fed rate hikes will mark the end of a decade of cheap money, also in the emerging markets, and many companies in the emerging markets are heavily indebted. All of this indicates that the ECB will cut its forecast for growth and inflation again in December and then relax its monetary policy further. In principle, the bank might then announce to extend bond purchases beyond September 2016 or to significantly increase the monthly purchase volume. However, September 2016 is still a long way off, and simply stating that purchases will continue for longer would not impress the markets. I therefore think the ECB is more likely to announce a higher monthly purchase volume. We are probably asking quite rightly where all of this is heading. Why buy more bonds if the plan hasn't worked so far? It hasn't had the desired effect on economic growth in the euro area. However, the finance ministers of heavily indebted countries have nevertheless been able to accept low interest rates. Who would have thought at the peak of the sovereign debt crisis that the Italian finance ministers would have to pay less than 2% for 10-year bonds? Unfortunately, the money printing in the euro area is cheerfully continuing. That's the only reason why I expect the DAX to move upwards again soon. Thank you for listening, and please see our Week in Focus report for more information.